All right, so one of the reasons it seems like your stock's moving back is that you lowered your full-year profit guidance. Can you give us a sense, what was the real catalyst for that? Is it tariffs? Is it the stronger euro? What's the biggest factor?
We actually didn't change our guidance. What we do is we guide at constant currency. And as you know, the euro's been particularly strong versus other currencies this year. And all we did was mark our guidance to market. So we took the number down from 1.55 billion euros to 1.48 billion euros. And that 70 million is just the Forex translation. That's all it is.
All right, fair enough. We're looking at the euro chart right now. So the euro's gained about 13% against the dollar year to date. But over the last 3 months, it's been more about 2.5%, 3%. Has that been the tipping point, or is it just basically the upside trend and the strength of the euro that's really impacted?
Well, the euro's been strong against a lot of currencies this year, and we're a global business. We do about 15% of our sales in the U.S., but we do 30% of our sales in Asia, more than 10% in Latin America. So it's a wide currency basket. The common thread is that the euro's been strong. We report in euros, and therefore there's a translation effect. But you know, we're naturally hedged. We do a lot of local for local, and therefore it doesn't impact our profitability. It just impacts the numbers that we report.
All right. You get about 13% of your business right here in the United States. A lot of talk about tariffs that could start on August the 1st, a 30% tariff on goods coming out of the EU. How much would that impact you? And also, how much of the uncertainty surrounding trade impacting your business?
These are the right two questions. The first one, it doesn't impact us much. And the second part is indirectly it does because it impacts our customers. So the first one is we are local for local in quite a lot of places. We have 130 factories around the world. We have a dozen in the U.S. And therefore, we manufacture locally, and we are agile with our supply chain. So we disclosed a while back when the tariffs came out that the full impact of the tariffs for us at the EBITDA level was about $25 million a year, which really is not a whole lot for a company that does $1.6 billion, $1.7 billion, $1.8 billion of EBITDA, depending on the year. So not a big number. Where the impact is that it creates uncertainty for our customers, and companies don't like uncertainty. They purchase less when there's uncertainty. They invest less, and this is what we're currently seeing.
One of the best-known brands associated with your company is Deluxe. Actually, I looked in my garage. I've used that before. But you also, I think you sell it through a partnership with PPG. So I think the bottom line question I really have for you, are we going to see any kind of significant change when it comes to pricing due to trade uncertainty, tariffs, the stronger euro? How are consumers going to be impacted by all this?
Pricing's been going up continuously for the last few years. Initially, it was to absorb the raw material spike because, you know, the raw material markets went into overdrive a couple of years ago. Raw materials have settled now. They're actually on the way down, and year on year this year, they'll be flat to slightly up. The impact has been general inflation. Wage inflation was a big impact until the beginning of this year. It's settled down now, but if you look at us in terms of pricing, we were up 2% in the first quarter, 2% in the second quarter. So we're taking pricing up selectively in order to absorb these impacts and also to realize the pricing power that we have through our brands.
I'm talking about the consumer there when it comes to pricing, but also what about your business to other businesses? We had the One Big Beautiful Bill passed here in the United States. A lot of people expected to spark a wave of CapEx spending. Are you starting to see a boost from that? Maybe when it comes to some of the coatings that you have for industrial purposes, or just the fact that maybe people want to build new buildings, they need to buy some paint?
Yeah, we're not really seeing that boom in CapEx spending. There's a lot of uncertainty in the market right now, and that uncertainty is in part driven by the tariffs. But it's you know, the global economy is being shaken by some of the geopolitical events that you have around the world. And when that happens, companies have a tendency to pull back in terms of CapEx. You had a similar discussion in Europe when Germany announced that it was going to increase its defense and infrastructure spending. But these are longer-term effects. Usually you can't measure them in the short term, and we're not seeing them in the short term. We do think that's going to be a boost over time, but this is not going to be a story for 2025.